Hello everyone, I'm Akshay Patel. I'm going to give a presentation on for the accounting theory and the current issue subject. We choose a research paper for the International Financial Reporting Standard. The topic of the research paper is the impact of the International Financial Reporting Standard adoption in Australia. The principal author of this report is the Nicholas Passwell. We submitted to this paper to the Louisiana. Our group member are there, as you can see, the Akshay Kumar Patel, Bimal, Mohammad Ubaid, Keshav and Pinkesh. Here I am going to explain the executive summary. First of all, let's understand what is the International Financing Reporting Standard. So it is usually known as the IFRS, and these are the standards issued by the IFRS Foundation and the International Auditing Standard to provide the common global language for the business affairs, so that the company account are the understandable at the corporate across the international boundaries. Currently, international financial reporting standards are applicable to all the entities, including the profit and the non-profit organizations. This research paper focuses on how IFRS framework should be adopted by all the entities in Australia, and specifically is emphasized on the application of the IFRS frameworks by the public limited company which are listed on the Australian Stock Exchange. The research makes the point of the impact of adoption IFRS on the following four categories. The main four categories are I'm going to explain. The impact on the quality of the financial reporting mechanism of Australia, how they impact on the compatibility of financial reporting mechanism of Australia, benefit that would be the gain by the listed entities for the investor and stockholders, which is how can the stockholder and the other investor can get the benefit from the report. That will be explained in the research paper. And analysis by the senior management of the listed entity to understand the insight of the impact of the adoption of IFRS. Now my friend will going to explain further about the introduction part. Thank you.
Hi everyone, good morning, it's me Kisab Yawali. My student ID is EMB21502. Today I am going to give a short presentation on the topic International Financial Reporting System. What does it mean, and why it has been utilized throughout the world, and from where it has from where it began. Thank you. Just first I like to explain what the International Financial Reporting Standard means. Okay, International Financial Reporting System, usually known as IFRS, is accounting practices or the accounting standards which are issued by International Accounting Standard Board to provide the common practices to the accounting users throughout the world, so that it is easy to understand and easy to compare with the various companies. As we know today, the investors living in the country B, country A can easily invest their money at the wealth and the certain company XYZ and the country A. There is no restriction for the investments. After we invest, we like to know how's the position, what is the company position, where it is, how much assets it has, how much liability, how much creditors, how much dividend is being paid. So in order to know that, we need to look the company's balance sheet, from which we can easily identify, the company has this much assets, this much liabilities, this much creditors, this much debtors. So we can easily identify the position of the companies. So that to make the easily understandable to each and everyone around the world, for the investors, to make the easy practice, the International Financial Reporting Standards, they releases the accounting standards which the international companies needs to adapt. But also the international financial reporting system releases the accounting standard, but it do not compel, it do not have the rights to investigate whether the certain countries are following their standard policy or not. But many of the countries they also releases their own accounting principles, but they release them on their, though they release their own, they release on the basis of the accounting standards which have been released by the International Financial Reporting Standards. The main just I like to talk something something about the background from where the accounting standard came into practices. The first from where the accounting standard practice came into existence was from the European market. In the European Union, they were trying to make the similar the same accounting practices throughout the European Union, but the concept, but the principles of the accounting international financial standards so good and so was much fruitful to everyone, so that it took the big platform easily, and now it has been adopted by various of the countries throughout the world to show their companies current position and where it is. Thank you. This was and thank you just for listening to my presentation.
I'm talking about the limitation. The limitation of the research mainly relate to the method adopted for research and the nature of the studies reviewed. Research paper related are mainly those papers which are published in ranked journal in order to ensure that only those papers which have passed through rigorous peer review process were considered. The choice of research method committed different conference and other working papers. The research method is selected and sourced for papers based on relevant terms in order to capture relevant papers. However, alternative use of keywords in different papers may result into omission of relevant important papers. In this research, due to relying on different studies of past, the samples used by different studies may vary from other studies conducted. Hence, different studies conclude different aspects due to the various samples used and different previous covered. Not so, it becomes difficult for the reader to draw conclusions based on different studies. Thank you.
Furthermore, about accounting quality, we came to find out the major 8 accounting qualities through the group discussion, and they are conservatism, and the second one is earning management. Likewise, third one is the recognition of timely loss value, relevance and earning management. Fourth one is value relevance of intangibles, and the fifth one is accrual reliability. Likewise, the sixth one is readability of financial report. In number 7, we have matching concept, and last but not least, we have a quality of accounting and impact of IFRS adoption on audit community effectiveness. Thank you.
Hey friends, it's Muhammad Abdullah. My student ID is EMV3626. First of all, I like to thanks to my respected teacher and all the students, and secondly, thanks to my friend who gave me opportunity to talk about this topic, impact of international financial reporting standard adoption in Australia. So I will continue this topic with the comparability. So comparability is one of the key quality which accounting information must process. Accounting information is comparable when accounting standard and the policies are applied consistently from one period to another period, from one region to another region. The comparability consists of 2 keys, which is one is voluntary disclosure. What is voluntary disclosure? Voluntary disclosure is the finding on impact of adoption of IFRS suggests that it decrease the inconsistency of the disclosure which are attributed to the diversity of the firm. The study result revealed that the adoption of IFRS increase the comparability of financial statement between the countries. The second type is financial ratio. That is the study focus on rotation analysis of companies of different industry, companies belonging to the similar industries and the companies of the different sizes. It concludes that the adoption of IFRS reduced the diversity of financial reporting with the use of variability of ratio. However, during the time of study, impact of IFRS adoption on rotation analysis, the period convert was recent after the IFRS implementation. That's all from my part. So my friend will give you the conclusion about all this discussion.
Start about the conclusion. The analysis above shows that the adoption of IFRS has benefited many organizations. Furthermore, the research also throw the lights on the other potential benefits from the IFRS adaptation, like cost of capital and mobility of the staff. Also, the research also focus on the impact on for-profit organizations. However, the study also comment on the impact of IFRS adaptation on non-profit organizations. Some of the following can be concluded from the study of impact on IFRS adaptations. First off, the impact of the adaptation of the IFRS has left positive impact on stakeholders with increased analyst following and accuracy and disparitions of the analyst forecast. The second, some of the study revealed that the comparability of the financial statement has made easier for comparison with entity. And third, the manager of the listed entities gains higher degree of premiums from the pessimism from the statement of IFRS due to the positive benefits arising from the accounting convergence.